Okay, that is the headlines right now. Ashwini is with us at 1:30 as always with a quick check. Ashwini, good afternoon. Your reading of the screen, 7.5 on the Nifty.
It's at best choppy. I mean, Nifty is still up 8 points. Bank Nifty is hardly down 6 points. So very tough to say that breakouts or breakdowns on either side give you any sort of opportunity. My sense is that around these levels, it should be possible to buy, 10,800 is your stop. You've been down for 4 odd sessions, 4 to 5 sessions. So somewhere I think a support is likely to come in. The risk reward from a shorting perspective is not as high. So my sense is that possibly some buying should happen here, given that global markets are going in one direction, we are going the other direction. So I don't think there's a great shorting opportunity. It's up to people who can take the risk to get on the long side. Basically 10,800, 900 is the kind of zone we are in. Having said that, Adani Enterprise is a buy with a stop of 120, target of 132. ICICI Pru is a buy with a stop of 300, target of 325. And India Bulls Housing is a buy with a stop of 610, target of 632.
Ashwini, this move in Adani Ports, I think you had a call going earlier?
Yeah.
Okay, all right. Target met or 344 on cash in cash right now?
I think the high of the day is probably 349.50. So maybe if the market does recover, this appears to be a strong stock.
Okay. Names like Bata, Page, etc. Ashwini, any thoughts?
See, again, it's that consumption group which continues to move up on good results. I think Page seems to have made some sort of a bottom, may not hit fresh highs from here, but definitely 27,500 thereabouts should be a target here.
All right, Ashwini, thanks very much for joining in. Well, it looks like the market is coming off actually a little bit now. So look at that. The Sensex, when we started the show, was up about nearly 90 to 100 points. And at current check, it's just up about 40 odd points. And in terms of the stocks actually which are coming off, look at something like Vedanta. That has moved sharply actually to the low point of the day. SBI is another one which has taken a bit of a knock. And then, of course, a lot of these steel companies, so Tata Steel, JSW Steel, they too are heading lower. And this whole clutch of banks, in fact, Yes Bank, SBI, Kotak Mahindra Bank, all seem to be a bit on the losing side. But let's talk about some numbers that just came through. Bosch has posted a weak set of earnings. They've seen a big miss on the margins front. Revenues have also come in, below estimates this time around. So joining in now, we have Mr. Soumitra Bhattacharya, the MD of the company, who joins in. Mr. Bhattacharya, good afternoon, sir. Thanks very much for joining in. While we do understand that the overall environment for the auto space itself has been weak, but first I want to just talk about the margins. Why, this big fall this time around? And even in the past, margins have been pretty volatile. So what's the sustainable run rate? And, even for Q4, which I understand is where you have better margins from all the 4 quarters, what is the expectation in Q4 and for FY20?
Yeah, thank you for having me on your show. I think we have to look at these numbers in totality. While there's been, I'm talking now of the quarter of October to December 2018. And while there has been growth in certain segments in the market, take for example tractors as well as HCV, LCV, there's been a sharp fall in pass cars. And the overall growth or degrowth of the market is 0.1%. So the market has been flat, and Bosch Limited, 85% of our turnover comes from mobility. So we've also given a flat set of numbers. The second, I would say, is Today in the automotive market generally, the demand is muted. This muted demand started not just after Diwali, but also we have seen this coming up in January. So we expect for the automotive market a muted last quarter 18-19, and we have, as I said, 85% of our turnover comes from mobility. Having said that, the operating profits are retained at a similar level of the previous year on a tough quarter. And of course, our PBT and PAT are far higher, but that is mainly due to the mark-to-market marketable securities where we've had the financial gains.
Subdued fourth quarter as well for the powertrain segment, and maybe for the foreseeable future going into FY20 as well?
From Bosch, we never give guidance on our performance, but I can tell you about the market currently. The market has had an all-time high in fiscal year 17-18. The first two quarters of the automotive market on Q1 and Q2 for 18-19 has been also remarkably good. So you're talking of a market which has had all-time highs on all sectors. That means pass cars, HCV, LCV, tractors, three-wheelers. The second is always there's a market correction. And third, we clearly see that there is today a relatively filled up pipeline, both at the dealers as well as at the OEMs. It of course differs from OEM to OEM, but relative to the past, there is some inventory, and these corrections have to happen for the last quarter 2018-19. So as I mentioned, I would be surprised if we had other than the muted quarter for the last quarter for the industry.
Okay. What about the automotive aftermarket segment? What are the demand trends looking like?
The automotive aftermarket, after a lull for some time in Bosch, we've had a good run in the FY 18-19, and we were at near double-digit growth for the year, and I expect that we will continue also for 18-19-20 also a double-digit growth.
And also, post this BS6 transition, since all the contracts would be up for rebidding, would you see any sort of market share losses there?
Well, I'd rather be specific about BS6. First is, as I've always mentioned, that the transition from BS4 to BS6, we in India are taking a leap which no country in the world has done, which is, if you take an advanced country like Germany, where Bosch's parent has been founded, Germany took 8 years to go from Euro 4 to Euro 5 and then to Euro 6. Now in India, we are moving from BS4, which is, you can say, slightly looser, but more or less equivalent to Euro 4, to BS4 to BS6 in 3 years' time. That means we are skipping BS5, we are going to BS6. Second is BS6 is dependent on a lot of things, including technology absorption, which Bosch is working with all its customers and doing an end-to-end holistic technology supply chain on this. And third is, in BS6, the country is going to be also dependent, very dependent on fuel availability across, which means the 10 ppm sulfur across the whole country. So keeping all this in mind, we as a company, as Bosch Limited, we are very positive based on the working that we do in OEM, that it's going to be a tough race, but it's going to be possible, subject to fuel. BS6, some areas there are going to be challenges. For example, if you take the compact car on diesel, after it goes into BS6, we know that 1 liter, 1.2 liter, these are tough challenges. From 1.5 liter onward, diesel cars are far more amenable in terms of total cost of ownership. So in summary, we expect a pre-buy to happen before the BS6 is introduced on BS4, and on second, the technological change is going to be a very important changeover for the entire industry, and Bosch supports this with all the OEMs that we work with.
But at the end of the day, it will depend on the OEMs, right? And what's the upgrade cost for them? And if the cost is too much, then you in turn down the line get affected.
That's why I said that, first of all, if you look at diesel, only the pass car and that to the compact pass car gets affected. Both diesel and gasoline IC are very important parts of Bosch Limited. We are a very strong player worldwide in diesel and gasoline, and we've been, our parent has been working with electrification for the last 10 years.
Yeah, just to pinpoint, for example, if Maruti, which is a big client on the diesel side, if they find the cost to be, too high, just to take that as an example, how would that impact you?
Yeah, as I said, compact cars for diesel is a tough proposition because the delta cost on a low base of a compact car becomes difficult for the customer or consumer. But as I mentioned, from 1.5 litre onwards, diesel is still a very good proposition in terms of TCO.
Okay, so thank you very much for answering all those questions. Appreciate you joining in.